All right, what's going on, everybody? So, last video that I did was a 2-minute video on Twitter, and it got some really nice feedback. So, I'm trying to provide some more actionable analysis moving forward now that the market is starting to pick up in terms of volatility a little bit. But before we do dive into the video, I want to say if you ever want to support me or if you want to just help me not eat ramen noodles tonight, you can sign up through my Bybit referral link. And no, so seriously, what that does for me is it helps me out a lot. Bybit is currently doing a ton of campaigns where if you deposit and register, you're eligible to win just a ton of prizes, something like over $1.2 million in prizes that they're giving away. Like they're giving away like 100 iPhone, 14 Pros and stuff like that. And my personal giveaway for Christmas as like a thank you to you guys is I'm going to be giving away a PS5. So if you register through my link, you are eligible for a PS5 giveaway as well as all of the like tons of different Bybit campaigns that are currently going on and like deposit incentives and fee rebates and zero spot fees and all that kind of stuff. So really does help me out a lot, and some really cool incentives for you guys. So now that we have gotten that out of the way, and I've done my shill fluencing, let's just go ahead and talk about the fact that we gave ourselves a way of predicting that BTC would potentially come up into these range lows, right? We said that pretty much we don't want to be the people sitting on their hands waiting for something like this to occur or a reclaim of this range low, right? More appropriately, we don't want to be waiting for that reclaim of the range low to then only having start to make these bullish arguments, because realistically this could happen, right? And by the time that that level is reclaimed, you might see price action move very quickly and leave you on the sidelines, and from there it would be very difficult to actually go and adjust at that point, right? Your emotions would probably get the best of you at that point, and it would just be very hard to want to stay in this like flowing motion, this state of flow with whatever the market's doing. You're going to be playing like catch up, right? So the way that we broke it down was, as long as we have this lower time frame strength developing, we can anticipate a move up into this region, right? But we only started to really dive into that analysis once we were able to define it via, my arbitrary definition of what is strength in markets, right? So for me, strength means, are we shifting structure bullishly and are we reclaiming key levels? And the only time when we did that was these sorts of candles, right? And that allowed us to start assuming, oh, you know what? That is strength, right? Prior to that, any strength that you were able to show, because you were able to show it, was on lower time frames, so less significant kind of levels, right? So you're that person diving into something like an hourly chart or a 15-minute, and sitting down with your cup of coffee and staring at the screen for 8 hours, every single day. I'm not that kind of person, so only really when we start to do something like this, am I able to start acknowledging the strength that price action is truly showing, right? It's not that I didn't know we were already uptrending. I absolutely knew it. But at that point, we were only doing half of my strength, definition. We were shifting the structure bullishly in the form of higher highs and higher lows, but we didn't reclaim any sort of key levels until here, right? That's when we break out above that range. That's when we reclaim those 4 hour 200 moving averages. So, as a sort of portrayal to go along with all of those arguments, we could even go as far as to say, oh, when you look at something a little bit more obscure, like the 2 hour chart, we even have this 2 hour 200 MAs, portraying the trend, portraying the uptrend that we were able to acknowledge beforehand, right? And this is kind of allowing us to more efficiently justify the trend so that our puny little brains can digest what exactly is going on and how exactly are we going to look to trade it, right? So when you establish all of these arguments, uh, uh, a little bit of a rule that I like to abide by is justification, expectation, invalidation, right? And I know there's a lot of Asians, and the fourth one, as a good friend said, is liquidation, right? But we want to not acknowledge that one. We want to stay away from that one. But I know that's a lot of Asians, but really you only have to remember two of them: justification and expectation. Because most times, whatever justification you have to your expectation, that same justification is going to be your invalidation, right? So, how did we define strength initially to anticipate this push upwards towards this previous range low in the first place? Via us breaking out of this 2 week long range high, as well as reclaiming those 4 hour 200s, right? So, what invalidates that analysis? Oh, us falling back inside that range, right? Losing that level and losing the 4 hour 200s, right? You could go as far as to say, oh, on top of that, we also lost our trend per trail, the 2 hour 200 moving averages. And so far, right, we're very much threatening breaking our daily structure along with all of that, right? We're starting to kind of threaten a lower low. Whether you see it lower than here or lower than here, it doesn't really matter because we're trading below all those key levels and our trend is quite clearly skewed bearishly at this point, right? On these lower time frames as a result of smacking your face on a more significant high time frame, right? Very high time frame level, 5 month long range lows getting rejected and now seeing that start to bleed into these lower time frames and into your highest time frame bullish arguments, and those are the only bullish arguments that you really have, which is essentially to say if we lose those bullish arguments, we are once again downtrending amongst literally all time frames, right? This is not a new sort of mindset. This is something that we've been able to shift into for a lot of the price action as of the past year, right? There have been several times where we shift into a mindset where there's just no bullish argument. I don't give a shit about your stupid little daily candle and the wick, below it. I don't give a shit about your 15-minute bull div. I don't give a shit about the stochastic RSI on the hourly is starting to flip bullishly and skew towards the upside. I don't care about any of that because we're just bearish amongst literally all time frames, right? So at that point, that's when you kind of just fuck off and go, full-fledged vacation mode, right? And you come back later after some sort of new trend is developed on a time frame that you're willing to acknowledge. For me, probably something more along the lines of like, when we flip into an hourly uptrend, then I'll start to acknowledge price action to some degree. If we can't even do that, then pretty much everything is just noise. And I have, all the freedom in the world to just not really pay attention to price action at all. So that's kind of how I'm thinking about it, right? We said, hey, I can't justify being very, very, very high time frame bullish, but I need to be able to acknowledge the uptrend that absolutely is an uptrend, and it's allowing me to scale my assumptions from this level into this level, right? And once we get here, if we do this, I'm not the person that was coping and complacent and missed out on additional price action on the way up into that rally. So my adjustment that's necessary to be made, whether we give a beautifully textbook sort of reclaim or even if we do this, right? My adjustment that I need to make is a lot less sort of on the drop of a dime, right? It's a lot less drastic than the people who were coping and complacent and solely betting on that sort of region to reject us and everything melt back down and a downtrend to develop amongst all time frames again. So that's the point. There's analysis and then there's actionable analysis. You want to be on the side of the actionable analysis, right? When CPI is pumping or when we are ripping, right? Those people that are so damn adamant on this region holding as resistance are pretty much shitting their pants at that moment, right? It's only after the fact that they're able to come in and start retweeting their tweets and claim clout and post, pictures and videos calling bulls idiots and whatnot, right? So you don't want to really be those people. Those people are very malicious in terms of they want to get across this sort of conviction, this undying conviction that they are just this, egotistical genius and, markets only move as a result of they allow them to move in that direction, right? Don't fall victim to those kinds of people. Instead, look to trade trends as they're developed on any sort of time frame that you're willing to acknowledge that trend, right? So from here, the bullish arguments in my mind are now basically invalid. The only thing that would quote unquote confirm it, and by the way, I hate that word, is breaks below these structures, right? So whether you're willing to say that's our daily high or low, or this is our daily high or low, regardless, because of the idea that we basically don't have any levels below us to kind of hold us above either one of those higher lows. We pretty much just want to assume that those daily structures are going to break anyways, right? And if those daily structures break, then that would be the confirmation, right? Again, I hate that word, but that would be the confirmation that kind of tells you in your mind, oh yeah, we are downtrending across all time frames again, because when you zoom into this low time frame price action, right? This looks like what my nightmares look like. It's slow bleed sort of styled price action, which, by the way, is exactly what makes me not want to bid any sort of retest, even though, we're getting the most ideal textbook retest in all the world and everything is butterflies and dandelions and whatever, right? I'm still not going to bid that price action because this is the drastic slope of which, we are kind of bleeding into it. And that is also to say, I would never have faded that pump upwards either, right? So these style price actions, if you're catching these kinds of moves, or if you're trying to participate in them, kudos to you. But to me, it's just so much more appealing to just not try and fight it and just kind of let that train, determine where it's going to stop. If it doesn't stop, then good thing you didn't fight it, right? So in this case, that slow bleed, that nightmare kind of price action did absolutely just melt straight through that level. So essentially, unless we reclaim that level again, there's no reason for me to want to be bullish and anticipating, another push up to 18.5 or anything along those lines. In the meantime, I can just kind of assume down and either let price action continue proving me right ever since this level breakdown, or I'll be forced to adjust once again, right? And I start that scaling of assumptions towards the upside from a small time frame into higher time frames, just the same way that I did a few days ago when I put out that analysis, that 2-minute video on Twitter. So I'm going to keep it at that. I was going to do a SPY analysis on top of that because SPY is doing some pretty significant breakdowns. This video is already starting to get pretty long. Essentially, the point that I want to get across is the 4-hour 200 moving averages have portrayed the trend for SPY as of the past 3 years or so, right? So pretty significant trend. It's more like 2.5 years, but you get the point, right? Pretty significant trend. Each and every single time that we reclaim it, we do start to threaten a potential push higher into a reclaim of a more significant level that would allow us to kind of say, oh, the generational bottom is in. The Fed is going to pivot. There's a koala stuck in a tree, and for some reason that's bullish. Money printer go burr, right? Whatever bullish, or yeah, bullish bullshit analysis, because all or narrative, right? Because in my mind, all narratives are bullshit. Whatever you're going to apply to price action at that given time to justify why it's going up, I totally believe you, right? But unless we start to do that, and that would be a full reclaim of the 200 daily moving averages, right? Unless we start to do that, then we are still at risk of seeing something like 2008 all over again, right? Where we just continue to trend downwards below our weekly trend portrayal, the past 11-year long trend, which are the 200 weekly moving averages, right? Back here, they were the 100 weekly moving averages. That trend broke down there, right? And that was a result of us staying below those 200 dailies and never reclaiming them. We just continued downtrending. That was 2008. The time prior to this was the 50 weekly moving averages. Same exact kind of thing. They broke down somewhere over here, right? And we lose them. We never reclaim 200 dailies, blah, 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 whatever. And that allows us to just continue downtrending for 2 or 3 years. So as long as we remain below those 200 daily moving averages, there's always going to be the risk of us just simply losing this trend as well. And if we lose this trend, then yeah, it is very much compared or comparable. Comparative. I don't know. I'm not an English, professor or anything like that, but you can compare it to 2008 all over again from like a chart standpoint without really speculating all too much and kind of just saying, oh, that's the last time that we trended below our, dedicated weekly trend. This is a break of your weekly trend, but it's not a trend below your weekly trend, right? So there's a difference. But you would automatically assume, a trend below or an immediate breakdown, potential trend below, and continuation to more downside. And you are now allowed to put that fear into fruition because we lost this significant level, right? We lost the trend portrayal as of the past 2.5 years as a result of never being able to reclaim those 200 daily moving averages, which look more like this, right? We never reclaimed those. And instead, our little ping pong zone, our little range that we've had for about a month now, that we've been consolidating at, has broken down. So we're now allowed to anticipate a retest of that very, very key trend on a high time frame, right? At minimum, we're allowed to anticipate another retest of this region. And at maximum, we can look for that breakdown from that region as well. So that would be like the worst case scenario. And if that happens, then in my mind, the bear market is just now getting started. But at least for now, I'm able to anticipate, a push from here into here, and I can justify that via TA, right? Via 4 hour 200s, a random ass gray box that I'm using as now resistance to coincide along with that. The simple idea that when we break out above or below ranges, you probably just don't want to fight that breakout, right? So here we are breaking down, and all those kinds of things, right? I'm able to justify it via my system just the same way I was able to justify it back here, right? Just the same way I was able to scale assumptions on the way up into this rally in the first place, just the same way I was able to justify it for all of this downtrend prior, right? So the exact same system that has kept me a winner has now triggered a new analysis on something more significant. So I'm just going to continue flowing with my system and assuming it's either going to keep me winning, right, just as it has been, or I'm going to be forced to adjust. And after I adjust, I will then win in that direction instead. That's exactly what is happening today. I'm being forced to adjust into a more strongly bearish bias into those more significant regions on high time frames, very, very, very high time frames, right? Somewhere along here. And then, either we get there or I'm forced to adjust because we never get there, right? In which case we come back in and we make a new analysis, right? And we take a whole new approach to the market from there. But as long as that never happens, then I continue to be right, right? And maybe I just continue to be right to just an even more extreme sort of degree. And hopefully it never comes to that, right? Because that would suck. But yeah, that's going to be the end of the video. This dragged on for way too long, much longer than I wanted it to be. But I hope you guys are doing okay during all the chaos and whatnot. Lots of going on with insolvency FUD, exchange rumors, stablecoin FUD, all those kinds of things. So I do want to kind of emphasize that security and safety is always going to be top priority, but even more so in environments like this. So the term bear market to me has been totally redefined. It's not just price action heading to the bottom right corner anymore. It is hedge funds blowing up, right? Illiquidity, it is exchange insolvency, it is stablecoin depegging, it is all those kinds of things. And all that kind of stuff is very, very scary, right? Government regulation, anything that you can name that, coincides with bearishness at any degree, at any level, is now kind of in my mind in the sense that that is what it means to be in a true bear market. So that's what we're currently in. So you need to be sort of prioritizing safety. I do have a video on leverage to kind of mitigate or help you mitigate exchange risk, which also allows me to keep my consciousness and fall asleep perfectly peaceful at night, knowing that I'm shilling you Bybit. So I'm kind of just assuming that everybody is utilizing those tools effectively to mitigate their own inherent risks that they inevitably have to take as a result of being a crypto market participant. So I hope you guys enjoyed this video. I hope you're doing okay. Much love. Like, comment, subscribe, share with your grandmother, all the YouTube influencer shit. And yeah, take it easy, guys. Peace.